Good evening, everyone, and welcome to today's Market Watch. Wall Street closed virtually flat last night, with the three major indexes showing almost no movement. The Nasdaq finished at 25,297.62, the S&P 500 at 7,354.02, and the Dow Jones at 51,876.11, all essentially unchanged. But here is the interesting part. Pre-market futures are already ticking higher, with Nasdaq futures up 0.43%, S&P futures up 0.21%, and Dow futures up 0.13%, pointing to a slightly positive open tonight. Among the major tech names, we saw some divergence. Nvidia slipped a tiny 0.13% to close at 192.53, while Tesla edged up 0.49% to 379.71. Nothing dramatic there. Bitcoin is still hovering around 60,240, and the crypto-leveraged plays are not showing any significant movement either. On the global macro front, the U.S. 10-year Treasury yield is sitting at 4.38%, up just a hair from yesterday, and still stuck in that narrow range between 4.37 and 4.40. What this tells us is that the market's pricing of a Fed rate cut in the second half of the year hasn't been fundamentally shaken by China's rate cut. Liquidity conditions remain moderately loose. The VIX, or Fear Index, came in at 18.22, down about 1% from the previous day, and continues to operate in the normal 15 to 25 range. No spike there, which means the market isn't panicking over the latest US-China trade developments or the EU tariff decision. Sentiment is still okay. The dollar index slipped to 101.24, continuing its weak trend, and that is a direct tailwind for emerging market assets. With China cutting rates and the dollar softening, the conditions for foreign capital to flow back into Chinese markets are already in place. Crude oil bounced a little to 69.99, but it is still below the $70 mark, held back by weak global manufacturing data. Gold is flat at 4,062, hanging at elevated levels. Safe haven demand hasn't disappeared, but with rate cuts boosting risk appetite, gold is in a wait-and-see mode for now. On the currency side, the onshore yuan traded at 6.7842, down 0.18%, while the offshore yuan was at 6.7996, basically flat. Both are in a strong range between 6.78 and 6.80. The key takeaway here is that the central bank's rate cut did not trigger any concerns about yuan depreciation. In fact, foreign inflows are actually pushing the currency higher. A stable and slightly stronger yuan reduces the currency risk for foreign investors holding shares, and combined with today's surprise rate cut, we are likely to see net inflows from northbound capital today. The signal to watch is whether northbound net buying exceeds 15 billion yuan in the first half hour of trading. If it comes in below that, we may need to lower our expectations. On the trade front, the Biden administration is planning to introduce new rules in early July that would use performance density as a new threshold to further restrict AI chip exports to China. This is actually reinforcing the domestic substitution narrative. Meanwhile, the EU's anti-subsidy tariffs on Chinese electric vehicles have officially taken effect, with rates ranging from 17.4 to 38.1%. China has vowed to retaliate, but the market has already priced this in. For today's A-share market, we are expecting a higher open. The People's Bank of China surprise 10 basis point rate cut is the direct catalyst, and with US futures pointing higher and the yuan stable, sentiment is positive. That said, if the CSI 300 futures open with a gain of less than 0.3% or turn red immediately after the first trade, the mood is weaker than expected. The Shanghai Composite is likely to rise today, driven by the rate cut. It closed yesterday at 4,073 and could challenge the 4,100 level today. If it falls below 4,020, the rate cut boost will have been fully digested, and we would switch to a range-bound view. The Chi-Next index also benefits from the liquidity improvement and could break above 4,250. For sector focus, semiconductors and AI computing power are the names to watch. Three things are lining up here. The rate cut directly lowers financing costs for tech companies. The planned U.S. export restrictions are strengthening the domestic substitution thesis. And historically, the semiconductor sector is the most sensitive to policy easing. This sector is likely to be the main battleground for capital today, with significantly higher volume and volatility. One area of caution, though, is the new energy vehicle sector. The EU tariffs are now in effect, and that is a direct headwind for export expectations. Money is likely to flow out, so if you are holding positions, it may be wise to reduce exposure and avoid chasing any retaliation-themed trades. To wrap it up, China's rate cut combined with a weak dollar has opened a risk-on window. A share semiconductors and AI computing power are the near-term winners. Our probability call for today is 65% for an up day, 20% for a sideways day, and 15% for a down day. Thank you for watching, and we will see you next time.